Hello friends, welcome back. Today we are going to discuss about financial planning. Since many people are confused of how to start their financial planning or how to do it, especially the youngsters or the ones who have started working. So today we will share some important basic aspects of financial planning that are applicable to everybody. Okay, let me just share with you all. Okay. So the beauty of this is that this is applicable to everybody, irrespective of what your income is. It could be X, Y, Z. But these points have to be kept in mind by everyone. Okay. Now, what are these? Whatever your income is, 30% of that income should go in your basic household expenses. This includes whatever expense you need to maintain your house. It could be your groceries, your utility bills, things like that. Initially, when you've just started working, maybe the household expenses are more than 30%. Quite a possibility. But, friends, just try to keep this as a benchmark or as a target that going forward you have to get this to 30%. Okay. Another important expense that we all face is EMI. You could have purchased any asset for which you're paying installments, or even the today small gadgets like we get our phones, our laptops. Everything is available on EMI. Friends, maximum 30% of your income should go into EMI. When we are paying multiple EMIs, we feel each EMI is very small, but when we add up all the EMIs together, we realize the EMI cost we are paying each month. Please try to curtail this only up to 30%. Because if your EMI cost is above 30%, there are high chances that it could lead into a financial mess. You could face some financial troubles. To avoid that, please try as much as possible to keep this only up to 30% or even less. That's the best part if you are able to do it. Okay. Now we've covered the expenses. Another factor is a lifestyle, our enjoyment. So 10% of your income now has to go towards your enjoyment also. You go out on weekends or you're going for some vacations, you're maintaining some vacation fund for yourself. You can plan out that way that each month you'll save some amount and then together you'll go on a maybe yearly vacation. Oh, earlier what used to happen is जब भी छुट्टी होती थी most of the people they used to go to their village or their गांव जाना है बस. So people have taken their kids only to the village. So when the children have grown up, they are also taking them only to the village. Okay, if you want to go out to and explore different places, you all have to take your children also to different places. Now, friends, even after your lifestyle and all, you will notice we've spent 30% on household expenses, 30% on the EMI cost, 10% we've spent on lifestyle. So 70% of our income we have already spent. Now we are remaining with only 30%. Okay. 30% has to be compulsory saved. Now, where to save your 30%? In two parts. Okay. You will have short term goals also, you will have long term goals also, and you have to take care of both. You cannot ignore one for the other. Otherwise, it could be a big problem later on, or even in short term. So, what are short term goals? Short term goals are those that you'll require money for in the coming 5 years. Okay, and what are long term goals? Generally from 15 to 35 years. So, when you're saving 30% of your income, okay, that amount of savings you will divide 50% into short term and 50% into long term. So that means 15% of your income should be saved for short term goals, 15% of your income should be saved for long term goals. Okay. Now, what could be short term goals? Let's have an example. It could be buying a car or upgrading your current house, going for a foreign tour. Like I told you, you save funds, every month, and then once in a while you'll go for a tour or something. All of that come in short-term goals. Okay. What are long-term goals? Generally, these cover the sure events of your life. Sure events means those events which are going to happen for sure, compulsory. Whether you plan for it or you don't plan for it, those events are going to happen, come what may. Okay. So, what are these sure events? One is retirement. Second, your child's higher education, your child's marriage. Now, what happens is retirement, which is such an important aspect of everyone's life, people tend to ignore it or keep it for the end, towards the end, give it the last priority. That's why we see a lot of people facing challenges in this phase. We are working a whole life, we've studied, we've worked, we have earned money, and later on, if we are not able to get the benefits, then what's the point of it? You know, so treat retirement as your third child or your second child, whatever the case is. Okay. Other two children may not be with you, they may go abroad. Today we are seeing these things happening, but this child of yours will be till the end of your life. You take care of it as your own child. It is not going to ask much from you. There is very little investment that will be required, but it will give you very nice returns when you have to enjoy the beautiful phase of your life. Okay. So, for short term goals, where can you save? You can save in bank RD, where you will have liquidity also, a little kind of no risk. You can save in mutual fund SIPs. These also give good returns for the short term. When it comes to long term goals, generally you can invest in PPF, LIC, or property. PPF, I no more suggest to people because earlier, yes, it was a very good investment. I'll be sharing another video with you all on India's growth story, the growth in investments, the investment patterns, how they have changed. That time I'll tell you all more about it. So PPF earlier was a very good option when the interest rates were so high and people have got nice funds from it. But if you see today's interest rate, it's just 7.10. It's decreasing every year. So PPF does not uh, be a very lucrative investment on today's date. Okay, there are more aspects to it. I'll discuss with you all later on. LIC, property, you can keep it as a second home or something. But again, no more an investment tool. Okay, so here, when you're investing, there are two things or two aspects to it. One is when you save and then you create an asset or create your investment, whatever it is. Another way to do is first you create your asset and then you save for it gradually. Example, I will tell you in RDs, you save little every month and then you create your corpus. Same with SIPs, you are saving every month and then later on you create your asset after these savings are made. Okay, but here once the savings stop, the creation stops. Okay, in create and save, you first create your asset and then you start saving for it. For example, real estate, there are only two tools across the world that first create your asset and then you save for it, and those are real estate and insurance. There's no third tool that will help you in this. Okay, for example, in real estate, you first buy your property, you first create your asset, and then you pay EMIs for it, then you are saving for it. Okay. Similarly, in insurance, you first buy a big purchase value, the asset value you buy, and then you save little, little every year or every month. Okay. Now, save and create you can use for short term goals. Create and save is used for long term goals. Okay. Here you get liquidity. So, just to summarize, uh, how to go about in financial planning, these are the thumb rules. Okay. uh, Friends, these thumb rules, try to follow as much as possible. Any rule you follow, for example, when you're told that you have to do jogging or walking for 30 minutes a day, drink 8 glasses of water a day, these are all thumb rules. If you follow them, you are rewarded, your health gets good. Similarly, if you don't follow them, you'll be punished. Maybe you'll have some health issue or the other. So if we follow these thumb rules, we'll definitely be rewarded. And we'll try our best to follow it. Maybe as of now it is a little difficult for a few people, but keep this as your target. So to summarize it, whatever your income is, 30% should go into your basic expenses, 30% of the income, 30% of the income should go into your EMI, maximum 30%. 10% of the income should be used for lifestyle expenses. So 30, 30, 60, and 10, 70. After spending 70% income, the balance 30% has to be compulsory save. 15% for short term goals, 15% for long term goals. Friends, I hope I've been able to share a quick